Good morning, 9:45 a.m. Eastern Standard Time on this Tuesday, October 25th, 2022. I'm XRP Future Millionaire, and I reside in the great state of Michigan, as XRP is down about 1.07%, sitting at 45.15. It came all the way down to about 444 last night. Huge support areas where it hit. And now we're going to see if it's going to start to move back up, as there's been several cryptocurrencies that have already made moves today. So could XRP be right behind it? We'll find out shortly. We'll look at the charts. But first, this is going to be a jam-packed update. So if you don't like longer updates, you're probably not going to like this one. But that is not my problem. I'm here to give you the information, and I expect you to watch it. But I also would appreciate a like. Hit that subscribe button and share this far and wide on social media. The audience that I have is absolutely spectacular. I cannot even believe the size that we're at right now, almost at 14,500 subscribers. It's just an honor and a privilege each and every day. XRP price action turns bearish as the SEC versus Ripple case gains momentum. After Monday's pullback to sub 46 cents, it is another bearish start to the day for XRP. Investors' focus returns to the SEC versus Ripple case. Key insights. On Monday, XRP slid by 3.32% to end the day at sub 46 cents for the first time in 4 sessions. A lack of updates from the ongoing SEC vs. Ripple case left XRP on the back foot as investors await court decision on the SEC's latest Hinman request. The technical indicators are bearish, with XRP sitting below the 200 EMA, signaling a fall to sub 40 cents. On Monday, XRP slid by 3.32%, reversing a 0.75% gain from Sunday. XRP ended the day at 453.44. XRP ended a 3-day winning streak and ended the day at sub 46 cents for the first time in 4 sessions. And as you can see, we're approaching this back test of 45.34 as we speak, only about 14 cents outside of it right now. A choppy start to the day saw XRP jump to an early high of 47.322, falling short of the first major resistance level at 47.68. XRP slid to an early afternoon low of 44.800. XRP fell through the first major support level at 45.65 before briefly revisiting 46 cents. However, a bearish end of the day saw XRP fall back through the S1, which is the first support, to end the day at 45.344. And then investors turn cautious towards SEC versus Ripple outcome. After finding support from the broader market over the weekend, sentiment turned bearish on Monday. Updates have yet to surface after the parties filed public redacted versions of the opposition briefs on Monday. While the defendants have enjoyed favorable court decisions in recent months, the progress in the case is beginning to gather momentum. As the case progresses, we expect XRP price volatility to pick up in response to updates and chatter from both parties. One other area of focus remains the Hinman speech-related documents. Investors await a court response to the SEC request for in-camera review proposed redactions to 2 drafts of Director Bill Hinman's June 2018 speech that discussed pending determinations before the commission. After failing to shield the Hinman speech-related docs under the attorney-client privilege, the SEC aims to use redactions to prevent the content from becoming public. A ruling in favor of the SEC would test investor resolve. William Hinman remains a central figure in the SEC vs. Ripple case despite the SEC's best efforts. In a famous 2018 speech, Division of Corporation Finance, William Hinman said that Bitcoin and Ethereum are not securities. XRP price action at the time of writing, XRP was down 0.94% to 4491. A mixed start to the day saw XRP rise to an early high of 0.45687 before falling to a low of 44905. XRP needs to move through the 45.823 pivot to take a run at the first major resistance level at 4684 and the Monday high of 47.322. Updates from the SEC vs. Ripple case and broader crypto market sentiment will provide direction ahead of U.S. economic indicators later in the day. In the case of extended rally, the bulls would have to take a run at the second major resistance at 48.34 and 49 cents. Third major resistance level sits at 5087. Fair to move through the pivot would leave the first major support level at 4432 in play. However, barring an extended sell-off, XRP should avoid the 4350 and the second major support level at 4330. The third major support sits at 4078. At the time of writing, XRP sat below the 200-day EMA, currently at the 4576. The 50-day EMA closed on the 100-day EMA, with the 100-day EMA narrowing to the 200-day EMA. The signals were bearish. A move through the 200-day EMA 45760 and the 50-day EMA at 46279 will give the bulls a run at the 100-day at 0.46773 and first resistance at 4684. However, a failure to move through the 200-day at 45760 would leave XRP under pressure. So right now, we're running up to 4576. We're about 0.5 of a cent off from there as of right now. So that's what I wanted to read with the chart. After we go to look at the XRP technical analysis, we're going to get into the Fed hike as it's being projected at 75, but I have a gut feeling that it could be 100 this time, and it happens on November 2nd, so stay tuned. So now let's get to the chart. The DXY is tanking right now. It's down below 111 spot. It's at 110 spot 999 or 111 right now. It's had a nice drop this morning. I talked yesterday about how once we come down here, we can come back up, but this has been rejected. We've already come through the first fan, so this is the ascending triangle, and we came through the support, fan 1, fan 2. Now the fan 3 should be about 110 spot 172. Breaks that, it'll come down to 108 spot 38. The only thing about this is XRP was tanking while the DXY was having a bad start. The Dow was up 76.15 points or 0.25% to start the trading day. And it looks like it's going to come up to that 32,691 as we've been talking about. It's not a guarantee, but we've had a bullish cross, and it looks like that's where we're going. PBR had a terrible day yesterday. As I said, it was about to have a sell. It was down better than 15% or almost $3 a share. You've got crude oils up 0.42% at 85 bucks. You got the U.S. 10-year yield got hammered. It's down, what is it, down 16.5 basis points this morning or 3.89% to 4.079. A lot of manipulation going on in the market. I'd be very nervous. Gold is up 0.53% up to 16 spot 58.80 or $8.90. That allows B2 gold to be up 1.58% this morning at $3.21. Silver is up 0.72% or 13.3 to 19 spot 34. And then we've got copper down 0.78% to $3 spot 406 per pound. Total crypto market cap comes over 9 billion or 900 billion for a split second. But this too is starting to have a bullish rally here, and this looks like I've been saying, it's hunting 940 billion. So what does this all mean? Well, let's take a look at Bitcoin, then we'll look at XRP, because XRP had a terrible day yesterday, but now it's starting to rally. Bitcoin looks to be starting its cross. I still think 20,413, if we can ever get over this 200 day, is where we're heading, which would give us another 1,000 points here, basically. If you look at it in smaller time frames, I certainly see it starting to gain a little bit of momentum here. Does that mean it's going to do it all in one shot? Well, that becomes a difficult spot when it comes to crypto. But right now, we held this beautifully, the downtrending support line on this descending triangle at 18,854. Now this is trying to help us make this push out to about 20,446. First would be 20,116, and you can see this underneath support right here, even at 19,188, held beautifully. Algo's up 5.37% this morning. It's another one that is starting to take off. Whoops, that's IOTA. So here's Algo. It's starting to push back up to the top of the pattern at 34.21, which is completely predictable. We've talked about this for the better part of several days here. Ethereum Classic looks to be one that is also behind, but starting to rally here now. But let's get into XRP as it's finally starting to pick up a little mojo. It got hammered yesterday. Came all the way down to 44.40. It's a critical support level. And the best chart to show right now, once again, we can show the perpetual futures exactly what happened. We failed to hold the perpetual futures chart. Remember, we had a breakdown before of 42.26. This time it looks like an inverted right shoulder. And this could be a fake out, but we have to come back up here and break this 45.73 pivot level. That's the resistance right now, and it happens to be the ascending triangle. If that gets rejected again, look out. If we get rejected again, look out. It's going to be very dangerous if this gets rejected again. So that's how we have to play this morning. So you would have that 47.70 resistance level. See if it can get back in it, and then ultimately make its way up to the top of the ascending triangle at 52, about 52 cents. And that can't happen unless we hold the ascending triangle, which I've said a billion times. So just pay attention to what I'm saying and you'll stay ahead. We were working on this down track to about this 42.8. We never made it here. And remember, in the USD perpetual futures chart, you can also see the bottom here very clearly at, what was it, 42.22. So that 42.40 works out very nicely. This 42.40 or 75, wherever you decide to go. But this works out very well to the actual bottom. And then if we actually got back through and had to break down to the actual bottom, it would bring you back to the descending triangle at 41.335 approximately, and that would be the true double bottom. So a lot of confluence here in today's patterns. So that's a nice update on XRP. We'll take a look at XLM real quick. We held the support at 106. We didn't come back down here yesterday, but the day before we did. Or a couple days ago, I should say. Over the weekend. And now it looks like if we can hold this, we're going to push up to this 11.6 area. Just remember with XLM, underneath we have that 10.678 support. But we need to break back over this uptrending resistance, which is the pattern formation. And as long as we stay below this, we're going to end up coming down to the descending triangle support eventually at 8.5. We're trying to break this uptrending support so that we can get back up to 1.222 and ultimately get back up to about 15 cents. But it's going to be very difficult to get all the way back up there. But we do have what looks like an inverted head and shoulders pattern, so we could have a volatile spike up, assuming the market doesn't go down even farther. DGB still maintains this uptrending support, and as we've talked about, if we can maintain this uptrend, it's going to continue all the way up back to where X marks the spot at around 912. Underneath support on DGB continues at 818, and below that we've got 747. If we break this X marks the spot, our next logical target would be 989. And once again, all these patterns suggest like we could have some kind of minor reversal back up. It doesn't look like we've gone to die just yet. We have resistance at 0087 is the closest to DGB. If we want to make a major run back up to the pattern formation, we got a long ways to go to get back to the true uptrend that's up over a cent. But right now we're stuck between 00802 and 00875. That's all for the technical analysis today, and now I would like to end it by reading this. Fed to hike by 75 basis points again on November 2nd. Should pause when inflation halves. Economics Reuters poll. So we'll get to this in just a second, but right now I'm going to look at one thing to show you how to support me. So if you would like to support me, the very first way, you can hit the thanks button, and you can send a thanks. Not very many people do it, but there have been a few, and I really appreciate that generosity. It's your hard-earned money, and to pay it forward like that is next level. So again, you can hit that thanks. Now, join me on MEXC, buy XRP, XLM, IOTA, and yada, 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 all the good ones. In the USA, no VPN, no spot fees, no KYC needed. You can futures trade, and it's allowed for USA users up to 200x leverage. So I highly suggest you join me there on MEXC. So once again, you can join me there. I put the link there for MEXC. Join me there. If enough people sign up, send some money over, and start futures trading, I'll be able to copy trade on there as well. On BitGet, if you're not a new user, or if you're a new user in the USA, you can't futures trade or copy trade. There's only 7 people that are allowed left on there, and I'm assuming you're not from the USA. Maybe you are. But you can join me over on BitGet as well. You trade XRP with no spot fees and no KYC or VPN in the USA unless in futures. It's prohibited in the USA for new users. And then also UPHOLD. UPHOLD is my most trusted. But spot fees are high, so I suggest going to MEXC or BitGet to buy it on the spot fees. All the links are there, so you can choose which one you like best. Join Tom's Army is the best way to support me as well. Get the exclusive Telegram and also join me with the exclusive content and get the most exclusive and elusive subscription-based service on YouTube. Oh yeah! In month 1, you get me abducted by aliens. In month 2, you get the XRP Dusty's Outhouse crypto news. And in month 3, you get the XRP predictor, the meteor coming to Earth, and so on. If you want to check out how to donate, XRP, Cash App, Venmo, PayPal. And then you can also join me on TikTok for further content, Twitter, Twitch. And then you can check out the ISO headquarters station. So before I get done with this update, and I really appreciate all the support, I really do, looking for new members of Tom's Army, and that entitles you to talk to me too in the lives on YouTube. As a few people found out a couple nights ago when I did a live at 1 a.m. It was spectacular. So Fed to hike by 75 basis points again on November 2nd. Should pause when inflation halves. Economics Reuters poll. So the U.S. Federal Reserve will go for its fourth consecutive 75 basis point rate hike on November 2nd, according to economists polled by Reuters, who said the central bank should not pause until inflation falls to around half its current level. Its most aggressive tightening cycle in decades has brought with it even bigger recession rates. The survey has also showed a median 65% probability of within a year, up from 45%. Still, a strong majority of economists, 86 of 90, predicted policymakers would hike the federal funds rate by 3/4 of a percentage point, 3.75% to 4% next week. As inflation remains high and unemployment is near pre-pandemic lows, results in the poll are in line with interest rates futures pricing. Only 4 respondents predicted a 50 basis point move. The front loading of policy rate tightening we have seen up to now has been aimed at getting to a positive real Fed funds rate at the start of 2023, said John Groen, chief U.S. macro strategist at TD Securities, referring to rates adjusted for inflation. So the latest updates, TSX opens lower as energy financial stocks weigh. Saudi Energy Min says using on emergency stocks may be painful. Raytheon quarterly revenue climbs on aerospace demand. Snapshot S&P 500, NASDAQ rise at open and mixed earnings reports. Japan sees BOJ easing and government FX intervention not contradictory. Instead of a pivot, in our view, the Fed is signaling that the 4C shifting from front loading up to December towards more of a more grinding pace of hikes from then onward. A majority of economists in the October 17th to 24th poll forecast another 50 basis point hike in December, taking the funds rate to 4.25% to 4.50% by end of 2022. That matches the Fed's dot plot median projection. The funds rate was expected to peak at 4.5 to 4.75% or higher in Q1 2023, according to 49 of 80 economists. But the risks to that terminal rate were skewed to the upside, according to all but one of the 40 who answered an additional question. Fed officials have begun contemplating when they should slow the pace of rate hikes as they take stock of their impact, given it takes many months for any rates move to take effect. Asked around what level of sustained inflation the Fed should consider pausing, currently running above 8% according to the Consumer Price Index CPI, the median from 22 correspondents at 4.4%. According to that measure, 4.4% isn't even close. The federal funds rate is going to have to be over 10 right now, in my opinion, to even combat any kind of this inflation, and it wouldn't even be enough. The Fed targets the personal consumption expenditures, PCE index, but the survey suggests roughly half the current rate of inflation ought to be a turning point. PCE inflation was forecast above target until 2025 at least. CPI inflation was not expected to have until Q2 2023, according to the poll, averaging 8.1%, 3.9%, 2.5% in 2022, 23, and 24. Respectively, Fed officials have indicated that pausing is only possible after clear and compelling evidence inflation has moderated, said Brett Ryan, senior U.S. economist at Deutsche Bank. With the Fed continuing its aggressive tightening to rein in persistent inflation, we expect a moderate recession likely to begin in Q3 next year. Even though we're already in a recession, I can't believe that we're even talking about this anymore. It's unbelievable. It's unbelievable. Numbnuts over there. Jerome Powell has no idea what's going on. How we can say recession Q3 next year. We might be in hyperinflation by Q3 next year. Look at the difference between recession and hyperinflation. It'll kick you in the back of the nuts or the back of the head, I promise you. Real growth would dip negative and the unemployment rate will rise substantially. Next year, the economy was expected to expand just 0.4%, a forecast that has been downgraded in each consecutive monthly Reuters poll since the Fed first started hiking in March. After growing 1.7% on average this year, the unemployment rate was expected to average 3.7% this year before rising to 4.4%, 4.8% in 23 and 24, respectively, an upgrade from the previous poll, but significantly lower than the highs seen in previous recession. Still, the chances of a sharp rise in unemployment in the United States over the coming year were high, according to over half of correspondents to an additional question. 23 of 41, 18 said the chances were low. So I wanted to read that. They're expecting a 75 basis point rate hike. I would think that we're about due for a 100 basis point rate hike.